You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And, you know, I think we may just spend the rest of the day celebrating. No, I am not the guy that's celebrating 420 Day. That is not me. I know there's some folks that will be celebrating today. Willie Nelson. Josh Levin, we needed some Willie Nelson music in the background today for 420 Day. We'll have to do that for next year. Let's see. What else do we sell? National Lookalike Day. Thankfully, there is nobody that looks like me. I mean, that would really be scary if we had to have somebody dealing with that. But that we don't have to. We don't have anybody looking like me. So thank goodness, that's a good one. I know I had a.
It is what it is.
About as good as we get. National Lima Bean Respect Day. I don't know if we're going to respect beans, but I can go for the Cheddar Fries Day. Cheddar fries are today. Yeah. Put a little bacon on. Is that bacon on top of that? Looks like there's bacon on the picture. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed. Yeah, you see the cheddar fries, bacon. Well, I guess I like the fries. I can get rid of the cheddar, just fries and bacon. I mean, how do you go wrong with bacon? Always the bacon. Let's see, what else do we have? National Banana Day. Okay, you know, I go for bananas. I'm banana split. Put a little chocolate ice cream in there, a little caramel sauce. Let's see, what else are we doing? Pineapple upside down cake. Yeah, we need a little whipped cream on that one. I digress. I guess once again, I could be spending the entire day. When you talk about cheddar fries, pineapple, banana. Oh, well, let's get on with it because otherwise I'll sit here drooling. Let's take a look and see what's going on in the markets today. The Dow Jones Industrial Average, it's up 339 points right now as we speak. S&P 500, it's up 1370. NASDAQ is down 114 points. Oil down $1.54 a barrel. What is driving these markets? Well, there's some earnings time, earnings reports coming out, and that's what's helping a lot of the areas in the market. So we'll be watching all those earnings reports. What effect is it having on the bond market? That's a big issue right there. Well, the U.S. 10-year Treasury down 7.5 basis points right now. We'll look in the Mortgage Minute and see if that's helping the mortgage market. Hopefully, we'll get a little bit of a reprieve. But we're going to talk a lot today about rates and recession because there's so much misinformation out there about rates and recessions. I hear so many people right now, they're really concerned about interest rates. And it's good cause, but here's the issue. If you are one of the private clients of Ron Siegel Radio, you're probably not too worried about interest rates. Why? Because we've prepared for it. We understand it. What are the markets doing? How do we navigate this market right now? Well, here's the issue is we really want to just look and say, okay, what is our strategy? What is our short and long-term goals? What are we planning on doing? Well, if one of your long-term goals is to retire, one of your shorter-term goals might be to get out of debt. Okay, how do you get out of debt? Over the last 2 years, we've seen a massive amount of home equity being amassed in our country. If you've owned a house for the last 2 years, you're probably seeing 30, 40, 50% appreciation. Just yesterday, I heard about a property right here in Orange County, California, that has appreciated in the last year $600,000. $600,000 in the last year. Now, if my math is correct, that's about $50,000 a month. Yet, there are people still out there who don't understand the concept that your mortgage rate is only one part of your household debt service. Household debt service. What are the other parts? Well, what's the interest rate on your credit card statements? If we ever get back to it, what are the interest rates on your student loans? How about cars, furniture, any other debts you may have? What interest rates are you paying on those debts? Now, you put all those together, weighted, of course, because obviously in most cases, the mortgage is the biggest number. And you put all those debts together, and you're going to get a blended household interest rate. Now, here's the strategy. You can either send a copy of all of your mortgage, of your card statements, or a schedule with every bill that you have, the revolving debt, installment debt, mortgage debt. Send a copy of every statement to rj@ronsiegelradio.com, rj@ronsiegelradio.com. Or you can put together a schedule, do it on an Excel spreadsheet, tell us all those numbers. Or you can just go to rsrnodebt.com, rsrnodebt.com. Fill out a short survey right there. And we can come back to you with what your blended household interest rate is. Blended household interest rate. Now, why do we want to know the blended number? Well, because that tells us what your real interest rate is. Yeah, you may have a 2.5%, 3.5% mortgage rate, but when we weight it with all of the other debts you have, if it comes out to 4.5%, 5%, 5.5%, 6%, yes, I know I could keep on going because a lot of people have 30% credit card debt. Well, what's going to end up happening is we're going to find out what your household interest rate is. Why do we want to know that? Well, maybe we want to restructure your home loan. And yes, I know, get you into a higher interest rate loan. In some instances, check with your CPA. That may be tax deductible. And now you pay off all those debts. Now, why do you want to do that right now when interest rates are high? Well, we don't necessarily want to do it when interest rates are high, but it's too late to do them last January when interest rates were significantly lower. But what we do right now is you take advantage of the market. So we know right now that the market interest rates are high, but we know also, or have good belief forecasting, that next year we will be in a recession and interest rates will drop. And we're going to talk more about that in a few minutes. But interest rates will be lower when we're in a recession. So when you do the cash out refi, there's what they call a loan level price adjustment. Means interest rate is higher on a cash out refi than it is on a rate and term refi where you get limited or no cash back, and on a purchase money loan. So we do that cash out now in anticipation that 6 months or a year from now, interest rates will be lower and we'll restructure without having that price adjustment for the cash out. You save money on it. You do it strategically. We're going to talk more about that. We're going to talk about rates, real estate, and recession when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. How to approach rising mortgage rates as a buyer. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 1990 or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Let's take a look and see what's happening in the mortgage world right now. We will take a look very first at where are the markets? Well, S&P 500 up 10.95. U.S. 10-year Treasury down 5 basis points. Mortgage-backed securities, they're up 31 basis points. That means interest rates are improving. When the bond goes down, the yield, when the bond goes up, the yield goes down. But like I do every morning, I like to give you where the interest rates really are. This is based on yesterday's number, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual lock rates with consumers across 35% of all mortgage transactions nationwide. Where did the loans lock at yesterday? If you want to know that, Well, we've got that information right here for you. Again, these are loans that were locked yesterday. Conforming rate loans locked at 5.344. 5.344 now. First trading day of the year, January 3rd, 3.409. 3.409. So being at 5.344, yeah, it tells you that you should have locked earlier. Well, we were telling you that all along. 3.4. So it's almost 2 percentage points higher than it was back then. Now, you can't get back to those rates. Now, you can get close. There are strategies that we're using right now with some of our private clients to help them get back to close to those rates. Can't get exactly there, but there are some strategies to help with that. But the question becomes, why is that happening now? What's going on? Well, we've got existing home sales that came out. Measures closings on existing homes showed that sales were down 2.7% in March at a 5.77 million annualized pace. This likely measured activity in January and February, including some of the move higher in rates, but not all of it. On a year-over-year basis, sales are only down 4.5%, which is still quite strong considering higher rates, higher home prices, and tight inventory. Now, I want to share that number with you again. Year-over-year sales are down 4.5% because I'm watching some characters on social media and they're saying, well, there's no such that inventory is not tight because we've sold so many properties. Well, sales are down 4.5%. Not for a lack of buyers, because I hear about buyers all the time having trouble getting their offers accepted. Well, we have a few strategies to help with that. If you're having trouble getting your offers accepted, give us a call at 800-306-1990, 800-306-1990, and we'll see if we can help you out. Speaking of inventory, it did increase almost 12% from February to 950,000 homes for sale, which is down about 10% from last year. This is the normal inventory build that we discussed last month that occurs every year during this time. There is now a 2-month supply of homes, up from 1.7 months, when 6 months is considered balanced. Speaking of the imbalance of supply and demand, homes were only on the market for 17 days in March, down from 18. 87% of homes that sold were on the market for less than 1 month. This should continue to be supportive of home prices. So we are going to see the rate of acceleration should slow. The rate of acceleration should slow. That does not mean prices will drop. It's like if you're driving down the freeway, and I do not recommend going over the speed limit, but just say you're driving down the freeway at 80 miles an hour, you see a police officer on the shoulder, and you slow down to 70. Does that mean you're going backwards? No, you're just going at what the speed limit might be. So think about that. Median home price reported at $357,300. National number. We are significantly higher here in Southern California. That's up 15% year over year. This continues to get skewed by the mix of sales. Sales on the lower end are down sharply, while sales above $500,000 are much higher. First-time home buyers have accounted for 30% of sales, which is a nice move higher from 29% in the previous report and 27% 2 months ago. Cash buyers increased from 25 to 28%, while investors purchased 18% of homes, down from 19%. Foreclosures and short sales account for less than 1% of all transactions. MBA released their mortgage application data last week, showing purchase application volume decreased 3% last week and is down 14% year over year. Put the cash buyers in there, those not taking out a mortgage, and they're down about 7%. MBA reported 30-year fixed rates at 5.2%, which is the highest in practically 10 years, 2% higher than this time last year. Now, again, that's the MBA numbers. Those come from last week. I already told you that OBMMI is telling us rates yesterday, 5.344. And, of course, we share with you every day. Think about this. It went from 5.27 on Monday to 5.34 on Tuesday. Thankfully, as I reported a little bit earlier, the bond market is showing green today. Bonds are up which means rates are down so far this morning. We'll see what they do on the locking side later in the day. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. As I am prone to do every now and then, I think we're going to do a little bit of a pivot here, and we're going to go to a break early because when we come back, we're going to have a little bit of an extended segment when I want to get into chatting about rates, real estate, and recession. So note to engineers, they always love it when I do this, that we're going to go to break a little bit early. So when we come back, we're going to talk about rates, real estate, and recession. Then we'll talk about how to approach rising mortgage rates as a buyer. And maybe we'll get to evaluating bid over ask prices in real estate. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com. Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments, paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. So this morning I wanted to give you a little bit of we call it a workshop on Ron Siegel Radio because, well, I don't know what else to call it. So we want to talk a little bit about rates, real estate, and recession. What happens with rates, real estate, and recession? And for those of you that know me, might know that I had a computer crash last week, so I'm going to try and see if I can share my screen. It probably is not going to let me because of all the privacy things. Every time I go through and try and do something, it tells me that I'm not allowed to do it, or I got to go through a new privacy issue or some garbage like that. But what I want to really talk to you about this morning is what happens in the marketplace. What is going on when we're dealing with rates and I wonder, I guess I did the wrong thing here. But what happens in the real estate world when we start seeing a change in interest rates, when we start seeing a change in the recession items, or are we going into a recession? So, what do you know? I think I've shared my screen here somewhat. So I don't exactly know what the heck I'm doing here, but we're gonna see if we can get this through this. It's always fun because I do this last minute, so I don't tell my team that we're gonna do it, and so they're not prepped. And you got the host that's the problem. So I'm gonna come through here and try and show this to you and see if we can get it on a better presentation for you. So here we go. Let's look at the rates during the recession. So what we're going to talk about is inflation. Now, we know that inflation right now, as measured by various government institutions, we're actually looking, I don't know, the screen didn't change. So I don't know why that happened. So maybe I can't do what I want to do here. But we'll just remove that. And I'll give you the words eye view and see if maybe I go to share and slides. Nope, not it. Okay, so in any event, I'll walk through it. I'll word it through. So 2022. I don't know why that doesn't show up there. My team's great. Look at them getting this set up here. Okay, so mortgage rate dynamics. So what affects the rates? Inflation is a big issue. We've got massive inflation right now, and we're watching the numbers go up. But do we know what the effect that has? I've told you before that inflation is the arch enemy of bonds. Why? Because bonds are fixed. They erode. So when you're limited on your income, but your inflation is going so high, the net effect means you lose purchasing power. So inflation really, really is the arch enemy of the bonds. Now, what's going to happen when the Fed increases interest rates? Now, the Federal Reserve is already talking about increasing interest rates. I told you yesterday that the St. Louis Fed president, Bullard, he thinks that the Fed funds rate should go to 3.5% by the end of the year. That's a dramatic increase in interest rates. Is that good or bad for the market, for real estate? I'm going to tell you in a minute. What about the balance sheet runoff? What is balance sheet runoff? Well, the Federal Reserve has been buying the 10-year treasuries, and they've been buying mortgage-backed securities. The only thing that drives mortgage rates is mortgage-backed securities. What is the value? What is the price of that mortgage-backed security? So the mortgage-backed securities have two components that we look at. One of them is, what is the coupon? So right now, say we've got a 4% coupon, and what is the price of buying that? Well, that's driven by the market. The market says, I'll pay more for it. So the price of the bond goes up, and in order to make the coupon right at 4% fixed number there, the yield goes down. And vice versa. If the market says, well, I don't want this bond. I'm not happy with a 4% return. I think I can wait and get better. Well, what happens is, or I can go somewhere else and get a better return. So then the price of the bond goes down because nobody wants it, and the yield goes up. That's how interest rates go up. Interest rates and yield are the same, but the interest rate or the yield always moves in the opposite direction of the bond. So if the bond goes up, rates go down. Bond goes down, rates go up. So when the Federal Reserve is letting their balance sheet run off, what does that mean? Well, that means that they're letting they're not buying anymore, or worse than that, they could be selling. So they've been buying up the mortgage-backed securities. They've been buying up the 10-year treasuries, and they put it on their balance sheet. Now they say, okay, we're going to let it run off. How do they do that? Well, a bond matures, or somebody refinances their house or sells their house, pays off their mortgage. That money comes back into the Federal Reserve if they owned that bond, and they don't reinvest. So they let their balance sheet get smaller. They keep the cash and let the balance sheet dwindle. That's balance sheet runoff. Now, how does that affect the market? Well, that means there's less demand in the market for those bonds. When there's less demand for the bond, the price drops because there's not as many people want it. So right now, we're also looking at a recession. We're looking at going into a recession. So the issue there is, and we're back one slide, guys. The recession is coming. Almost every single measure that we have or expert says that we've got a recession coming. We're going to explain why that's going to happen and why we're able to pretty much forecast it in such a where we believe it's a very, very accurate forecast. But let's look back at history. Next slide. Back in the 70s and 80s, we had Fed Chairman Burns, and he saw inflation go from 7% to 14%. Ow! Right now, we're at 9%, maybe 10%, depending upon what measure we use. Mortgage rates went from 12% at that time to 18%. Now, Chairman Volcker took the Fed funds rate from 11%. Now, right now, remember, we're at 0.25%. He went from 11% all the way up to 20%. Well, what happened when he did that? Well, we ended up seeing that when he went from 11 to 20, inflation went from 14% to 5%. So they raised the Fed funds rate, and that brings the inflation down because it's slowing down the economy. How did the mortgage market respond to that? Well, mortgages went from 18% to 12%. Now, I know I talk to a lot of people all the time, and if I said, well, rates are at 12%, they're going to just look at me like I've lost my mind. But they were there in the 80s. What are the consequences of that? Well, the S&P went down 30%, caused a recession. That's the normal occurrence. Now, the next slide you're going to see, Alan Greenspan. He had inflation go from 1.75 to 3.5. Now, he was smart enough to act a lot quicker than the Fed is today, right? Because they waited when it went from like 1 till 9 before they did anything. You can look at historically, no one waited that long, but that's our Fed. Mortgage rates, they went from 7% to 8.5%. The Fed funds rate, he raised it by 2% from 4.75 to 6.5. Remember, we're at 0.25 right now. Inflation, how did that respond? It went from 3.5% to 1%. And what did mortgage rates do? They went from 8.5% to 5.5%. Again, the consequences are the S&P 500 went down 50%. Yes, there was a recession. Now, Jerome Powell, he's our current Fed chairman. He's watched inflation go from 1.5% to 8.5%. Unbelievable. Such an idiot. Oh, no. Don't say that about our chairman of the Federal Reserve. We can't do that. Mortgage rates, we know that. They've gone from 2.5% to 5%. Fed funds rate, well, it was at 0. We're at 0.25 right now. I told you that. And projections are 3 up to Bullard saying, again, like I told you before, 3.5%. What's the inflation going to do? Well, if history repeats itself, and it usually does, well, it should drop. The mortgage rates, what are they going to do? Well, again, if history repeats itself, they should drop. And with the recession, we would anticipate the S&P 500, the stock market, slowing or going down as well. Now, let's take a look at what happens. Again, if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're seeing a slide right now, hikes and the runoff, the impact on rates. So you can see that we had a rate hike of 25 basis points in 2016. And then in 2017, the Federal Reserve decided that they're going to really get aggressive, and they hiked rates early in 2017. Rates dropped. They hiked again in April 2017. Rates dropped. July 2017, rates went up a little bit, and then they dropped. And then they started with the runoff. Well, remember I told you earlier, the runoff means that bond prices will or should go up because there's not as much demand for the bond. Or the bond price should drop, rates will go up because there's not as much demand. So when we look at the runoff, it starts, well, we started seeing rates go up. 25 basis point hike in the Fed funds, rates went up, continued that way. Now, when the rates take hold in October of 2018, that's when we started seeing the interest rates drop. And they started slowing the runoff back there in April of 2019. And then once they finished the runoff in July of 2019, rates dropped really quickly. That's why we're expecting these things to happen right now again. Now, the other thing that we're watching is the inversion. This leads to a recession almost all the time. When you have the 10-year Treasury minus the 2-year Treasury and you get a negative number. I know this might sound like it's in the weeds, but these are the reasons why we are really, really confident that we have a recession on the horizon. Almost always when we see the 10-year Treasury minus the 2-year Treasury go negative, which it did this month, we see a recession generally in about 160 to 170 days after that. And we can look historically back at the charts going all the way back to 1980 on the next slide. And we'll see that when we have a inversion, we see a recession. 1980, 82, 1991 approximately. Then we saw in 2001 or so, 2018. Inversions lead to recessions. Now, obviously 2008, I've told you many, many times, that I call an anomaly. Why do I call it an anomaly? Well, it wasn't a recession that was driving things. It was the real estate market caused the recession. So it's a little bit backwards because in most recessions, real estate prices appreciate. Now, you look at it and say, well, Ron, how can we have a recession when we've got all these people working? But when we look at the next slide, we see unemployment rate and recessions. When do we go into a recession? When unemployment is high or when unemployment is low? It's low. What we do is we see that when unemployment is at the bottom and just turns up, just starts that turn upwards. So like right now, we're at 3.6% unemployment. When that flips and goes the other way and starts going up, now we're going to see a recession on the horizon. We're at 3.6. Historically, some of the best numbers like 3.5. Now, do you think we're closer to the top or the bottom? Well, most people seem that we're about as close to the bottom, the lowest unemployment numbers as possible. Again, going back to the 40s, we see when the unemployment just turns at the very bottom, that is an indicator of a recession on the horizon. Now, what happens to mortgage rates during a recession? Well, again, if you're watching us, if you're listening to us on radio, you can go to our social channels, Ron Siegel Radio on Facebook, and we have the whole show put on there every day, right around 6 p.m. So you can go and look at these charts, and I'm sure the team will put this in our workshop section as well. So we watch in the 1980 mortgage rates, recession of 80, the recession of 82, the recession of 91, 2002. Interest rates drop during a recession. Isn't that fascinating? Now, again, 2008 was a bit of an anomaly, but interest rates generally drop during a recession. And we pretty much think that that's going to be the same case this time, is that we're going to see interest rates dropping. So in 2002, interest rates went from 7.375 to 6.75. In 2008, they went from 6 to 4.875. And the recession of 2020, rates went from 3.75 to 2.75. Why does that happen? Well, generally, I missed it. 1981, 11 to 8.75. 1982, 18 to 13. All the time. 1980, 16 to 11.75. Why does that happen? Well, the Federal Reserve says we're in a recession. We've got to save the economy. So they start lowering their interest rates, and they start maybe even buying the bonds. Now, during all of these times, what's happening to real estate during these recessions? So we've got a chart here that goes all the way back to 1960. Now, remember I told you that we've got the anomaly, man, and young people all remember 2008. That's the only recession they've lived through. 2020 was odd because right after the recession, that's when we had the government shutdown for COVID. But here's the issue. Housing stays strong through recessions. And there was only one time when housing really dropped, and it was such a minimal amount, we don't even count it. During the 1990 recession, housing dropped 1.9%. Again, 2008, housing dropped, causing a recession. It wasn't recession that caused housing to drop. But every other year, housing either stays flat or appreciates, goes up during a recession. So we're still looking at that as strong housing. Why? It's basic economics 101. We have got record low inventory. Back in 2007, we had 3.7 million homes for sale. Last month, 870,000. So when you've got a low supply and high demand, prices stay strong. Now, are they going to continue going at 20%, 19%? I hope not. But the likelihood is that they're going to slow their level of growth. Still be going, just like I said earlier in the broadcast about the car, still going full steam forward, just not quite as fast. And why is that? Because number of households are growing. 2007, we grew to 117, our household growth 116.01. In 2021, 129.93. Households are growing. People want to get out of mom and dad's house. 14 million more households, almost 3 million fewer back in the earlier part of the graph, 2007. So that just gives you an idea of what's going on in the marketplace. That is our presentation on rates, real estate, and recession. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, how to approach rising mortgage rates as a buyer, and we'll see what else we can get for you. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at ronismylender.com. That's ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com. Do you know a homeowner experiencing divorce? Do you know a real estate reference in the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, the real-time real estate segment today, being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. The Scout has some great information on there, and it's free. You can find out what your property is valued at based on 4 different sources. You can even find out what properties are available in any market, about 97% of the U.S. landmass. You can find out what the properties are doing, what's available for you. How to approach rising mortgage rates as a buyer. In the last few weeks, the average 30-year fixed-rate mortgage rate from Freddie Mac inched up to 5%, and in reality, it's over that right now, which we've told you that before. While that news may have you questioning the timing of your home search, the truth is, timing has never been more important. Even though you may be tempted to put your plans on hold in hopes that rates will fall, waiting will only cost you more. Mortgage rates are forecast to continue rising in the year ahead. If you're thinking of buying a home, here are a few things to keep in mind so you can succeed even as mortgage rates rise. How rising mortgage rates impacts you? Mortgage rates play a significant role in your home search. As rates go up, they impact how much you'll pay in monthly mortgage payment, which directly affects how much you can comfortably afford. So if you're watching us on RonSiegelRadio.tv, any of the socials, the team has put up a chart showing the impact of rising mortgage rates. As the rate goes up, your purchasing power diminishes. So with mortgage rates on the rise, you've likely seen, again, purchasing power impacted. Instead of delaying your plans, today's rates should motivate you to purchase now before rates increase more. Use that motivation to energize your search and plan your next steps accordingly. The best way to prepare is to work with a trusted real estate advisor now. An agent can connect you with a trusted lender, help you adjust your search based on your budget, and make sure you're ready to act quickly when it's time to make an offer. Bottom line, serious buyers should approach rising rates as a motivating factor to buy sooner, not a reason to wait. Waiting will cost you more in the long run. Let's chat. That's the Mortgage Minute, brought to you by our friends, our area trusted real estate professionals at Ron Siegel Radio. Visit rsrhomedigest.com. Let's chat a little bit more about, and guys, can you put that chart back up on the purchasing power, the impact of rising mortgage rates? Again, if you're watching us on RonSiegelRadio.tv or any of our socials, you're seeing this chart. And it's fascinating because we had to change the chart dramatically because what we were showing was 2.5% to 3% beginning of the year, 3 to 3.5. Now we're showing 4 3/4 to 6. But let's think about this. because I shared with you earlier, and I'm going to get the exact number so I have it right, that yesterday, according to OBMMI, rates locked at 5.344%. Now, thinking about that, if you've got $2,271 to spend at 5.344, I'm going to use 5 1/4 because it's easier, and there's that number's on the chart. If you've got $2,209 is what you can spend for your principal and interest portion of your payment. Based on a 5 1/4 interest rate, you can spend $400,000 for a house. Now, if your interest rate goes up to 5.5 and you've only got $2,209 to spend, you're looking at somewhere around $370,000. You've just lost about 15% of about 10% of your purchasing power, 7 to 10%. Now, here's the thought. If you understand how to work your numbers, one of the things that you do when you're looking to work the numbers is say, okay, I understand that that's where my budget is, but what if I play with the numbers? What if I take some of my down payment money, and again, you have to have a little excess in the down payment money, and I buy down the interest rate? And I have people say, Ron, you can't go dealing with points. 2 reasons we hate points. There's never a good time to buy points. Well, hogwash. When you're trying to get things done, you use the tools at your disposal, right? If you're looking to dig a hole, you want to have a shovel, right? So, if we're looking to buy a house, we need to figure out, how do we afford it? One of the ways sometimes you can use to afford it is by using buying down the interest rate, paying some of your money to get a lower interest rate. Okay, you bring that back to me now, guys. So when we go and buy down the interest rate, what is our focus? We're looking at the idea of strategically saying, I can't afford the house I want, or I'm getting outbid on the house that I want. Now, I can go and increase my purchase price and say to the seller, you know something? I know you're looking for $400,000 for this house. What if I give you $450,000? But I need your help. I can only give you $450,000 if you can give me $12,000 to buy down the interest rate so I can make that payment and get qualified. Now, let me ask you this. How many people do you know that are willing to say, if they have the money, that's the issue. If they have the money, say, I'll trade you. You give me $12,000 and I'll give you $50,000. Is that a good trade? Right? You can't even go to Vegas for that one. Right? I'll give you 12, you give me 50, and know that it's going to happen. Well, that's what this is. That's this concept. So now you got to do it the right way. The terminology must be precise in the contract. Otherwise, it causes some red flags, but we know the correct terminology. But what I want you to understand here is strategically, you can actually increase that amount of purchasing power by using the points. Now, I know you heard me earlier, and I said that we're going to be going into a recession and interest rates are going to drop. So frequently, we don't want to pay points that we don't have to at a time like this. Why? Because we're making a plan. Our plan is knowing that interest rates drop during a recession, and knowing that by the buying down of an interest rate is usually a 4, 5, or 6 year break-even period. We're looking at saying, don't do that right now, because we're going to come to you a year from now and suggest that you might be better off restructuring your home loan to take advantage of lower interest rates, lower payments, maybe getting that mortgage paid off sooner. So under normal circumstances, we're not suggesting paying points or fees. Roll them into the loan. Maybe add an extra eighth to your payment. That part is fine. But the whole issue there comes strategically understanding maybe you need to in order to qualify. And if that's the case, then you use the strategies that you have. You use the tools at your disposal. You want to use the right tools at the right time. If you're looking to dig a hole, a hammer is probably not the right tool. Similarly, we understand the idea, and I don't even know how to use a hammer. I've told you that before, right? But I do understand how to use the tools in the mortgage world. And as always, I ask you, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Levin and Josh for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.